Today is Sunday, June 15th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. We'll start it off with the scheduled events for this week. You'll see on Tuesday we're going to get the US retail sales. That number has been going up the past few months, so it would be nice to be able to see that trend continue. And then on Wednesday we're going to get the initial jobless claims along with Jerome Powell's Federal Reserve meeting. We talked about it in the last update, but there was a 99.9% chance that rates were going to remain the same at this Wednesday meeting. And the chances of the interest rate remaining the same at the July meeting is also high as well. And it's not going to be until the September meeting that we see a legitimate chance for a rate cut. We'll take a look at the charts next, but on Thursday before the market closed, I did decide to trim 20% out of all of my current positions. I did say previously that the plan was that once the S&P 500 reached a certain level, I was going to trim at least 5% and at least 10% out of my Dave position. But I had a feeling that the markets were losing their momentum and the chances of the S&P reaching that level was getting smaller and smaller with a potential dip on the way, and that's why I decided to trim 20% out of all of my positions instead of the original 5%. So this is what the SPY chart looked like when I decided to trim the 20% out of all of my current positions. Everything looked good for the most part. The SPY price was above the 15-day moving average and both of those were still above the 15. The original plan was to sell 5% once the SPY price reached this resistance level, and once the SPY price would have reached that level, that would have essentially brought us back to the all-time highs. And if that were to happen, I'm just not quite sure how much higher the markets can actually go above their previous all-time highs right now. And I found that it's sometimes better to sell a little bit early than a little bit late. And if we take a look at what the SPY chart looked like after Friday, you'll see that the SPY price is now crossed below the 5-day moving average, but it does still sit above the 15. So for next week, to have the upward price movement continue, it's going to be pretty important that the SPY price doesn't actually close below the 15-day moving average. And hopefully it's able to bounce off of it like it did previously. These are going to be all 14 of my current positions. Right now, Microsoft, Meta, Nvidia, Palantir, and Dave make up my top 5, and those make up 34.49% of my portfolio. By trimming 20% out of all of my positions, that now leaves me with 23.64% of my portfolio sitting in cash, which means 76.36 is invested. I do intend to leave that cash on the sideline at least for the next week or two, and when I do decide to use that cash, I'm not necessarily going to buy back into everything exactly the same way that I sold it, so there's definitely going to be a little bit of shuffling going around. I do still plan to hold right around 14 positions, but definitely no more than that. So if I do end up finding a few new positions to enter into, I'm going to cut out some completely to make room for them. Since Wednesday, my portfolio had a decline of 1.39%, Pershing Square saw a loss of 1.13%, and the S&P 500 had a loss of 1.03%, which brings us year to date. My portfolio is at a gain of 16.78%, Pershing Square is at a gain of 8% flat, and the S&P 500 has a gain of 1.85%. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.